When talking about support and resistance strategy, let's discuss both horizontal and trendline varieties. Let's go. King trading utilizes both horizontal and trend lines as a key part of analysis, so we'll review them both. Horizontal support and resistance might seem like a bit of a mysterious black art and are not easily programmed into algorithms. This is why different chart analysts or charticians often present similar but not exact values in their technical analysis. So why do we care about these levels? Well, often they represent areas where traders bought, sold, or got trapped. And speaking of got trapped, we'll explore that concept a bit more later. When traders both buy and sell at a particular price point, we aim to get in as many touches on that line as possible, with a minimum of 2, but preferably at least 3. When a line acts as both support and resistance, it enhances the quality of these touches. Candle structures and reversal patterns such as wicks, dojis, head and shoulders, plus cup and handles, can further improve the quality of these interactions and understanding of potential future trend reversals and breakouts. It's important to note that since all charts act and react the same, these principles can be applied across any time frame. However, avoid copying lower degree time frames like the 5-minute support and resistance levels to higher time frames unless the lower time frame has multiple hits. Too many lines on a chart can lead to paralysis by analysis. Generally, higher degree time frame charts have fewer lines, but their levels still apply to lower time frames. Make sure to subscribe to King Trading, as I use support and resistance strategy in my analyses all the time. Now let's talk about gaps. Gaps occur when the market opens higher, a gap up, or lower, gap down, than the previous day's close. These levels can act as crucial support or resistance zones. A gap near a support or resistance level can confirm the significance of that level. Traders pay attention to gaps, especially if they remain unfilled, as they can serve as dynamic support or resistance zones. But it's important to note that a majority of all gaps on all charts get filled over time. We just don't know how long it'll take, if ever. Breakaway gaps often occur after a period of consolidation. Such gaps can signal the start of a new trend and may establish a new support or resistance level. Gaps that occur at the end of a trend are called exhaustion gaps. They can signal that the existing trend may be losing momentum, and prices might reverse. The level at which the exhaustion gap occurs can become a new support or resistance level, signaling potential trend reversals. Ever hear of an island reversal? It's a pattern formed by 2 gaps on either side of a consolidation period, signaling a potential reversal. The support or resistance created by these gaps becomes crucial for traders. Now let's talk about trap liquidity. In financial markets, liquidity refers to how easily an asset can be bought or sold without affecting its price. Trap liquidity often occurs when traders enter a position at a specific price level, and then price moves against them, trapping their money until price returns to more favorable levels. Don't become trap liquidity. That's why at King Trading, stop losses have been backtested for optimal take profit and stop loss percentages, to avoid getting stopped when a stock dips prior to then it ripping higher, or risking too much money on any one trade if the trade continues to move in the wrong direction. With over 40 stocks and indices tracked and traded, trust me when I tell you, there's always another trade. Imagine being a trader trapped at a higher price. Now that's never happened. When the price resurfaces, you may want to break even by selling it at that resistance area or even setting a limit order. If other traders share this philosophy, it creates a challenging resistance area. Once the price surpasses this level, many traders set limit orders to buy, turning this area into a support zone. Retesting the support area after a breakout is normal behavior, and if confirmed by holding the level, the trend resumes. This is why many traders won't buy the breakout, but instead wait for it to confirm the retrace and enter the trade once it's held the previously established breakout areas, as sometimes breakout fails, and who wants to become trap liquidity? But remember, the best breakouts often never retest, but instead just start ripping higher and never look back. Volume analysis associated with gaps provide additional insights. High volume with a gap is often considered significant, indicating strong market participation. At King Trading, we often use a tool for incorporating both volume and price analysis. This helps us understand areas of strong support and resistance by pinpointing where traders had substantial activity. Finally, when delineating support and resistance zones, it's advisable to prioritize earlier time periods and initiate the drawing process from left to right, rather than concentrating on the most recent prices and moving backward in time. Commencing the analysis from the most recent price may introduce a phenomenon known as recency bias, potentially leading to inaccurate reflection of perceived key areas that might demonstrate limited historical significance when it comes to support and resistance. Moreover, keep in mind that crafting these zones involves navigating an ever-evolving landscape of market and its dynamics. It's crucial to constantly question previously established support and resistance zones. It only makes sense to reassess and adjust them periodically to align with the influx of new information and changes in market conditions. Let me know in the comments below what I missed when talking about horizontal support and resistance, as I'm always trying to improve the content I deliver. Now that we've focused on horizontal support and resistance, what about trend lines? These occur so frequently that luck doesn't cut it. Horizontal levels are static, while trend lines represent the dynamic direction of price movement, helping visualize the overall trend. Traders use horizontal levels for potential reversal or breakouts, while trend lines identify the overall trend and potential entry points. Just as breakouts above horizontal resistance or below horizontal support signal potential trend changes, trend lines do the same. It's normal to test the breakout area before continuing the new trend. Trend lines can expand over time, so charticians shouldn't lock themselves into drawing anything as gospel. Fundamental changes can affect technical analysis, and changes to trend lines happen all the time. For example, a rising wedge can suddenly turn into a channel, or what was thought to be a trendline support or resistance can broaden. That's why it's important to change as time persists. Remember, it's okay to be wrong when it comes to the market, just don't stay wrong. While historical data often provides a solid foundation for horizontal support and resistance zones, the relevance of trend lines tend to diminish once a trend undergoes a shift. Therefore, it makes sense to enhance chart clarity by considering their removal. In practice, traders often use both horizontal support and resistance and trend lines together to get a comprehensive view of price action. In summary, horizontal levels identify static price levels, while trend lines highlight the dynamic nature of trends. Both are valuable for technical analysis, and traders often use a combination for well-informed decisions. Support and resistance are critical to understand since it incorporates the trading psychology of other traders and investors and trading algorithms utilized by the big shots on Wall Street. So by including them as one of the many tools in technical analysis, it helps traders stay on the right side of the trade. Remember, technical analysis doesn't drive fundamentals, it's the other way around. So, understand the economic calendar and how market reports can influence these support and resistance zones. King Trading Discord provides this fundamental analysis. Check it out in the link below. Hope this discussion around support and resistance strategy has been helpful, as that's all I have for now until the next video, and we'll see you then.